Good morning, everybody. It's Dan Basse, Ben Buckner, wishing all a happy and safe Labor Day weekend. We are to the end of the week, the 29th of August, Friday. We're going to see how the markets clean up as we head into the long 3-day weekend. You know, surprising to me was yesterday's USDA biannual trade report. It dropped China from number 3 to number 6 in terms of U.S. exports. And so China was forecast only to import about $8 million U.S. to 2007. In our work, it would be going back to the trade war on how you define the calendar and fiscal year. That being said, that doesn't say a lot for U.S. soybean exports. USDA is kind of giving us the indication that it's not optimistic on a trade deal with China. And I think that really becomes more and more important as we come back from the holiday, along with what I expect to still be big crop estimates. The September crop report is done largely through ear and pod counts. Both are record large. So the USDA may come down a little bit on its yield, but it's not going to come down a lot with FC Stone out with their estimate on Tuesday. So Ben, take us from there. We're seeing some mixed tone in the Chicago market today. Corn's a little higher, beans are a little lower, wheat's caught in between. That's kind of where we start off here with you today, Ben.
Yeah, I think so. Well, we got some rain yesterday in Chicago and northern Illinois, northern Indiana. So I think, the forecast is mixed. And I know we do need 1-2 more rain events for the soybean crop especially, but it does look not terrible. It looks like we are going to get decent amount of rain across the western corn belt. You see on your left, these are 40-inch soil moisture ranking percentile. So where it has been driest relative to history, those places will get upwards of an inch or an inch and a half of rain. So that probably finishes those crops. I think that's pretty welcome. That's also where I think the surpluses are going to be centered on this year, especially given the 7-day weather forecast, which is on your right. So those are the places I think will struggle with storage capacity most. But did just kind of want to overlay this really consistent 7-day forecast, which is wet across the Central Plains, looking to see where dryness is currently, and that's exactly where it is. So I guess we are still thinking, to your point, Dan, we're not seeing are expecting meaningful yield revisions, and soybeans is probably still the upward surprise over the next couple of months. And so far we've got Chinese demand lagging. We've got USDA projecting fiscal year imports to China in 2025, $9 billion. That'll be from October to September of 25-26. So that kind of implies to me that they don't expect really any change from the current pace. So far they have spent about $5.5 billion in calendar year 2025. That compares to $12 billion through June a year ago in 2024. And so I think extrapolating the USDA's estimate, it's just kind of status quo for the next really 15 months. Which makes sense. We look at Chinese markets, they're not telling us that there's some kind of supply imbalance. The hog market there has totally ignored normal seasonal strength in late summer. The meal market in China is doing nothing. So again, this is not terribly surprising. China doesn't seem to need a lot of goods. Is of course buying South American soybeans in bulk still for the middle of autumn delivery. And I don't think needs a lot of feed grains at the moment. So that's, I think, lingering in the background. And so the question is, has the market really digested this, especially in soybean supply and demand? And that's really kind of an overarching question that we've got as we look towards harvest and beyond harvest. So here you see a pretty simple 3-month chart of December corn on a daily basis. And we did breach the 20-day moving average, and that's given, I think, some pause to the break this week. And so that's been a level that's been breached before. It hasn't really meant much, but it's important to acknowledge. But I just wanted to show you the 50 and 100-day moving averages. I think that's still pretty strong chart resistance. And so there's still a lot of burden here as we get into physical supply replenishment. And that's a question I think we've got. It's, does the market have access to all perfect information, all given scenarios, and it's trading that every minute of every day? And our concern is that that is not the case. So I think still our idea, and why we think kind of pick your spots on these lines to manage risk, is the market hasn't really digested physical supplies yet. And so we kind of tell the story. I think we'll revisit sorghum supply and demand. Even the old crop balance sheet, I think there are some meaningful revisions USDA has to make to the Central Plains, feed market. We've only sold 71 million bushels of sorghum through the end of August for old crop delivery. There's only 10 days left relative to the USDA's report. That's only 71% of the USDA's forecast. I think we run out of time. Final exports for sorghum in the old crop marketing year will be 73, 75 million bushels. They are forecasting exports to be 95. Probably you add 20 million bushels to sorghum supplies this year. On the right, you see, we've talked a lot about China not buying U.S. soybeans and how important that is for the soybean balance sheet. And sorghum's smaller, but it's a similar phenomenon. I mean, the exports for sorghum from the U.S. to Mexico to some extent, but anytime you breach 100 million bushels, it's all because of China. China's not buying U.S. sorghum. They've not bought a single bushel for new crop delivery. And total commitments, even when we include what we think the old crop carryover or outstanding sales, only left with 9 million bushels. 2 years ago, that was 70 million. I think that's important. The sorghum export demand is pretty bad. That's fine. But relative to the USDA's forecast, I think that's where we come in and think about, just challenge everyone to think about, physical supply and demand come November 1st. So they've got to raise their old crop sorghum in stocks number again by 20 million bushels or so. They are forecasting exports of sorghum in 25-26 to more than double. This seems absurd unless there is a deal done with China, in the next 60 days, which is not going to happen. So if the export number for next year, kind of the right circle number on the right, is 100 million, you can shuffle around feed demand and ethanol use. Those have to be maximized. And I think you're still left with an in-stocks number, with bushels with nowhere to go. Sorghum in 25, 26 of 100, 110 million bushels. That's something we haven't seen in about 3 decades. So corn's got to find demand growth. We all know that. That's not terribly insightful, but it's just going to be hard when you've got a lot of stuff competing for feed, competing for ethanol consumption. That, I think, is still ahead. And so once that happens, the market's been pretty short-sighted, very myopic. It will trade what's in front of it. We're concerned that that's something that will be in front of the market at some point. Just again, storage capacity, needing to clear inventories, weak interior basis levels. That's what's happening in sorghum already. We've seen kind of a downward trend in the last couple of weeks. In a lot of places, it's $1 to $1.10 below December Chicago corn. So the market there is still flirting with about $3 per bushel. That's going to get used, and it's going to replace a lot of corn demand. But then again, sorghum's got to find exports, and it's not going to if it doesn't have China. Also, something that's new that's jumped out really in the last 72 hours is just this collapse in Argentine export premiums. So basis, if you're an importer and you want to buy corn from Argentina, a week ago you were paying about $1.30 over December Chicago corn. All of a sudden today you're paying 93 cents over. This is counter seasonal. Usually you're kind of getting to the point where, South America is on its way to having very tight stocks. It has exported all that it has. That doesn't seem to be the case this year. All of a sudden, the Argentine market, at least, is starting to search pretty actively for autumn corn export demand. It's about 30 cents cheaper than the U.S. Gulf on a FOB basis. And I think doing our calculations, looking at boats leaving Argentina, what's left, they probably do have about 13 or 15 million tons of corn left to ship between now and the end of February. So the overarching theme is, again, we will all debate yields as we get into September, maybe into October, but there's just going to be a lot of stuff. And so again, pick your targets, manage risk appropriately. And I think that's going to be our theme, given Chinese-U.S. relations haven't really thawed until we see the next weather threat. So we'll get into South American weather, October or so, but between now and the end of the year, there's not much, I think, to change this trend still, unfortunately.
No, good run through, Ben. And when you look at the Southern Hemisphere wheat crop potential, as you've highlighted, record possibilities for Australia and Argentina. And it just leaves us with too much grain. And it's fortunate that we have to head into the holiday like this. But as you say, every once in a while, there's rallies and farmers need to reward it, particularly in the back end of the market where there's significant carries. So, good points. And the sorghum market in particular, I thought was very interesting. So thank you for that. Everyone have a great holiday weekend. We at Ag Resource will be back next Tuesday. I need to travel to Turkey for the Turkish grain meeting, and we'll maybe do the recording from there. Happy Labor Day and good trading, and have a great weekend. Ben and I will be back next week. Be well.
Bye-bye.